What if I told you a stock skyrocketed 168% on its first day of trading, halting multiple times for volatility? Sounds crazy. But that's exactly what happened when Circle Internet Group, the company behind the USDC stablecoin, went public. In just 2 days on the NYSE, Circle's share price nearly quadrupled from its $31 IPO price to over $123. And it didn't stop there within weeks. Circle's stock briefly touched $300, about 800% above its IPO price before cooling off. This explosive debut has everyone asking, what is Circle, and can it live up to the hype? But first, we have some exciting news. We're launching a newsletter soon with our latest stock analysis and top picks. So keep an eye out for that. If you enjoy deep dive videos like this, please subscribe to Risk to Reward so you don't miss out. Now, let's dive into Circle's wild ride. Circle Internet Group is a fintech firm best known as the issuer of USD Coin USDC, one of the world's largest stablecoins. Essentially, Circle provides a platform that turns real dollars into digital dollars USDC, a cryptocurrency pegged 1-1 to the US dollar. Businesses and developers use Circle's services to integrate digital dollars and blockchains into payments and apps. USDC itself is huge. It's the second largest stablecoin by market value, only behind Tether, with a circulating supply around $60+ billion as of mid-2025. Stablecoins like USDC are used in crypto trading, decentralized finance DeFi, and increasingly for everyday payments because they combine the stability of dollars with the speed of crypto. Circle has even launched a Circle Payments network to enable real-time, cross-border settlements in USDC. The company's mission? To build a more inclusive, frictionless global financial system using internet-native money. Circle attempted to go public via a SPAC merger in 2022, but that deal fell apart amid a crypto downturn. Fast forward to June 5th, 2025. Circle finally hit the public markets in a blockbuster initial public offering IPO on the NYSE. The IPO was priced at $31 per share, and Circle, along with some early investors, raised about $1.05 billion in this upsized offering. That gave Circle an initial valuation near $6.8 billion. Once trading began, investor demand went through the roof. Circle's stock opened at $69, more than double the IPO price, implying an $18 billion valuation. Frenzied trading pushed the price as high as $103.75 on day one, triggering multiple volatility halts before the stock settled to close at $83.23. That first day close was roughly plus 168% above the IPO price, one of the biggest IPO pops ever. The very next day, Circle's rally continued, with shares climbing another 48% and touching $123.49 intraday. By mid-June, and amid what some dubbed a stablecoin summer for the crypto market, Circle's stock was still surging. It nearly hit $300 at one point, an 800% gain from IPO, and closed around $263 on June 24th. This astonishing run-up gave Circle a market capitalization of about $64 billion, briefly surpassing the total USDC in circulation, a symbolic milestone for the company. However, the volatility has been intense. After peaking, the stock pulled back significantly. By late June, it was trading in the $180-200 range, well off the highs. Early investors who got in at $31 still saw enormous gains. But recent buyers learned the hard way that even stablecoin companies can have unstable stock prices. In short, Circle's post-IPO price action has been nothing short of a roller coaster. Despite the wild trading, Circle's underlying business has some major strengths driving investor enthusiasm. Circle is a pioneer in the stablecoin space. USDC's popularity has surged. Its supply jumped about 40% in the first half of 2025, reaching all-time highs over $60 billion. This growth reflects increasing adoption of stablecoins in DeFi, cross-border payments, and even traditional finance. Wall Street expects stablecoins to be one of the next multi-trillion-dollar opportunities in finance. As the principal issuer of USDC, which is fully backed by cash and treasuries, Circle earns interest income on those reserves and fees from transactions. With interest rates high and usage rising, Circle's revenue potential has ballooned. In fact, the favorable environment, including a US administration that's more crypto-friendly, has brightened the outlook for regulated players like Circle. Circle has been strategically partnering with heavyweight firms in payments and tech, which bolsters its credibility and reach. For example, Visa is working with Circle to settle transactions in USDC. In pilot programs, Visa moved millions of USDC over Ethereum and Solana blockchains to settle payments. Circle also joined forces with MoneyGram, enabling people to convert physical cash to USDC and back in dozens of countries, expanding access to digital dollars. And just days after the IPO, Circle announced a major collaboration with Fiserv, a global payments tech provider, to bring stablecoin solutions to thousands of banks and merchants. Circle has also built alliances with MasterCard, Stripe, JP Morgan, and BNY Mellon. These partnerships show that mainstream finance is embracing Circle's technology, giving it a significant edge in pushing USDC into everyday commerce. As the first major stablecoin issuer to go public, Circle enjoys a credibility boost. Its successful debut, the biggest crypto-related listing since Coinbase's 2021 IPO, signals that traditional markets see Circle as one of the legit players in the crypto economy. The company has been around since 2013, has survived multiple crypto cycles, and operates under US regulations with regular attestations for USDC reserves. This track record and transparency help build trust in a sector often marred by skepticism. Circle's approach of working within the financial system is a strength. If new stablecoin regulations pass Congress, a bill is pending. Circle is well positioned to thrive under clearer rules. Essentially, Circle is seen as a bridge between crypto and traditional finance, and that vision of integrating TradFi and Web3 has investors excited. Thanks to the IPO, Circle raised over $1 billion of fresh capital. This money can fuel expansion, developing new products, reaching new markets, and possibly acquisitions. The timing is great too. Interest in crypto finance is rebounding, and Circle can invest aggressively, while many private competitors might struggle for funding. Circle's strong stock performance also gives it a valuable currency it shares to raise more capital in the future if needed. In short, the IPO cash plus the buzz around Circle provide a solid springboard for its next growth phase. All these positives paint a picture of a company riding multiple tailwinds: booming demand for digital dollars, endorsement by payment giants, and a resurgence of crypto optimism. However, no story is one-sided. It's time to flip the coin and look at the challenges and risks facing Circle. The feeding frenzy for Circle stock has arguably pushed its valuation into stratospheric territory. At its mid-June peak, Circle's market cap topped $60 billion, with an enterprise value around $74 billion. That is higher than many well-established fintech giants. Yet Circle's annual revenues are likely just a fraction of those firms. Circle is trading at multiples far above traditional fintech peers, reflecting very high growth expectations. If those rosy projections don't materialize, the stock could see a sharp correction. We've already seen huge swings. A run up to $263, followed by a drop under $200 within days. This kind of volatility means investors could get burned. In other words, Circle's stock price has arguably run ahead of fundamentals, making it vulnerable to any bad news or broader market downturn. While stablecoin legislation is advancing in the US, the regulatory landscape remains a wild card. Stablecoins face scrutiny from regulators concerned about financial stability and illicit uses. Circle's USDC is fully reserved, but any shift in regulation could impact its business model or increase costs. Circle must navigate evolving global rules, and any delay, reversal, or enforcement action could slow growth or spook markets. Tether remains the top stablecoin by market share, and Circle must compete not only with it, but with emerging decentralized and bank-issued stablecoins. A US digital dollar, CBDC, or big tech entrant could disrupt the space. Circle's close ties to Coinbase, while beneficial, could also limit diversification. If exchanges or wallets prioritize competitors, USDC's growth could stall. Reports suggest some employees missed out on billions in IPO gains due to share lockups. Morale and retention could be affected. Now, as a public company, Circle faces pressure to deliver consistent results, launch new products, and avoid missteps. Execution risk looms large, especially as Circle aims to evolve from a stablecoin issuer into a global fintech platform. Circle's IPO wasn't just a market event. It marked a turning point in crypto's integration into mainstream finance. The company has momentum, strong partners, and a compelling product. But with sky-high expectations comes serious responsibility. Can Circle meet the hype? It's one of the most interesting stories in tech and finance today. If you enjoyed this deep dive into Circle, smash that like button and subscribe to Risk to Reward for more insightful analyses. And don't forget to watch for our upcoming newsletter. Let us know in the comments, will Circle's stock keep flying? Or is it headed for a reset? As always, this video is not financial advice. Thanks for watching, and we'll see you in the next one.